Hi, welcome back to Equity Masters Stock Market Wrap-Up. This is Rini. As usual, I'll take you through what moved the markets over the week in today's podcast. The Chinese curse, "May you live in interesting times," is an apt way to describe the past few months. I mean, just look at the recent correction. The small cap index is down 37% from its recent highs. The mid-cap index is down 26%, and the frontline indices BSE Sensex and NSE Nifty are also coming off from their recent life highs. I have also been interviewing our analysts and editors on the current bearish mood of the markets. You can check our conversation on our YouTube channel Equity Master, where we regularly post updates and insights on stock market and economy movements. Coming back to the topic, the one question on everybody's mind these days is, when will this bear market end? The situation doesn't seem to be improving. But that's just one side of the story. All is not lost. We are looking at the economy from the near-term perspective. That's why the picture doesn't look rosy. But when you look at the economy and market from a longer-term horizon, the picture looks very different. The current situation also creates an opportunity. Well, on that note, let's begin with a look at the broader cues. Indian stock markets extended their losing streak this week amid a sell-off across most sectors and lackluster trade in Asian peers. Equity indices fell sharply on Thursday, with the Sensex falling over 580 points amid concerns of a looming global economic slowdown, with domestic investors turning cautious after Chief Economic Advisor Krishnamurthy Subramanian virtually ruled out a stimulus package from the government. Globally, markets were jittery ahead of comments from Federal Reserve Chair at Jackson Hole, Wyoming. Speaking of US economy, minutes of Federal Reserve's July meeting showed policymakers were deeply divided over whether to cut interest rates, but were united in wanting to signal they were not on a preset path of more easing. Indeed, while a couple of Fed members favored a deeper cut of half a point, several favored no change at all. Meanwhile, International Monetary Fund has just given Donald Trump an earful. In unusually blunt language, the IMF has warned the US President Donald Trump's policy moves are counterproductive, won't achieve the desired results, and will slow the global economy. Now, in the news from the currency markets, the main focus of this week, the Indian rupee witnessed selling pressure against the US dollar throughout the week. In fact, on Friday, the rupee slipped to 72 mark against the US dollar for the first time in 2019, following sell-off in domestic equities amid weakness in Chinese yuan, which fell to a fresh 11-year low level. Bringing the rupee under more pressure, the global crude benchmark Brent futures rose 0.8% to trade at $60.75 US per barrel on Thursday. Adding to rupee woes, the dollar index, which gauges the greenback's strength against a basket of 6 currencies, rose 0.02% to 98.31. The 10-year Indian government bond yield was down at 6.6% on Wednesday. Meanwhile, foreign investors pulled out 9 billion rupees from Indian equities on Thursday. Note that Indian rupee became Asia's worst performing currency this month. For the common man, the falling rupee is going to hit where it hurts the most, the pocket. However, the fall is good for exporters like IT companies. If the fall continues, then the market will have a reason to worry, because that will result in outflow of foreign funds. Coming to foreign funds, foreign investors pulled out 83 billion rupees on a net basis from capital markets in the first half of August, continuing their selling spree in the Indian market amid uncertainty over FPI tax and global trade worries. According to depository data, foreign portfolio investors sold equities worth 104.2 billion rupees on a net basis during 1st to 16th August. So far in August, FPIs have been net sellers for 9 out of 10 trading sessions. In July, FPIs had withdrawn a net sum of 30 billion rupees from Indian capital markets, both equity and debt. The reasons for this are many, from slowdown in the economy to the budget, which had disappointed the market overall. Next, RBI rules out asset quality review for NBFCs. The RBI Governor Shaktikanta Das on Monday ruled out ordering an asset quality review of NBFCs that are facing a credit squeeze since the collapse of IL&FS in August last year. Addressing the press at the sidelines of the annual banking conclave organized by Federation of Indian Chambers of Commerce and Industry, Das said, "At the moment, there is no such proposal to have an asset quality review. Let me also add that 50 odd NBFCs and housing finance companies are being closely monitored." Moving on, shares of Divan Housing Finance Corporation came under pressure amid reports that lenders of the troubled NBFC are eyeing a 51% stake in the company by converting a part of debt into equity. Lenders to DHFL may take over the troubled housing finance company as a temporary measure if the consortium fails to find new investors. However, the resolution plan would also require the approval of all regulators in order to materialize. The scrip has been under pressure lately. On August 19, the company reported a financial repayment default worth 1,571 crore rupees regarding the issuance of bonds and commercial papers. Reacting to the news, the stock has been trading in the red. In the news from the banking sector, Yes Bank's shares witnessed selling pressure after CG Power and Industrial Solutions disclosed manipulation of accounts and likely diversion of thousands of crores of rupees. Yes Bank took control of a 12.8% stake in CG Power in May after invoking shares pledged by founder Avantha Holdings. The lender's market value has eroded by over 80% in 1 year due to chunky exposures in troubled companies such as Anil Ambani's Reliance Group, Z Group, DHFL, and Coffee Day Enterprises. Now, how this development pans out remains to be seen. Meanwhile, we will keep you updated on all the news from this space. Now, amid the falling stock markets, tumbling rupee and weakening economy, all the investors are wondering when will the good times come. Well, we don't know for how long this will last, but analysts like Richa Agarwal are looking at the stocks that offer stability. And she has been looking at the stocks that have a good dividend payout. It's a good idea to revisit them. You can follow her recommendations by logging on to hiddentreasure.in. That's all for today. Before I sign off, I would like to know whether you like our podcast. We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.